When you're purchasing a home, specifically when you're financing a home, using a mortgage to purchase your home, believe it or not, lowering your sales price isn't always going to be your best option. As a matter of fact, it will rarely, if ever, be your best option if you're skipping this vital step. When financing a home, financing a purchase, I always recommend that before you negotiate or bring down the purchase price, that you first maximize your seller concessions. Seller concessions are basically dollars contributed by the seller towards your closing costs. And every loan has their max allowable seller concessions. An FHA loan, max allowable seller concessions are 6%. A VA loan has a 4% max allowable seller concession. Conventional loans have 3% max allowable seller concessions. Now, I'm just going to use an FHA loan as an example. Let's say that you're looking to purchase a home. The home you're interested in is $350,000, and you and your realtor ran comps, and you decided that you want to offer $340,000. Now, it appears that the home will appraise for the $350,000, but because of the days on the market and different things that your agent was able to find and just what you're comfortable offering, you have arrived at the number of $340,000. Okay, so that's a $10,000 reduction. What I would recommend, and this is important, the part I mentioned earlier about checking the comps and making sure that the home's going to appraise, that plays an important role in this. So assuming that is the case, what I would recommend is asking for $10,000 in seller concessions and offering their ask price of $350,000. And the reason for that is because, remember, if you're financing this purchase, if you're getting a mortgage, bringing that sales price down by $10,000, you're essentially, let's say you're getting that FHA loan and you are going to put 3.5% down, right? A 3.5% down payment on a $350,000 FHA loan is going to be $12,250. Okay? If you reduce that to $340,000, it's going to be $11,900. So as you can see, you didn't net the $10,000 that you were looking for. Now, you did reduce the sales price by $10,000, but you didn't net that amount, which I'm pretty sure was the goal, right? So instead, if you ask for $10,000 in seller concessions, what's going to happen there is that's going to be distributed right at the closing table, and it's going to be covering your cost. Okay, so you will net whatever seller concessions were negotiated, assuming, of course, that the home appraises and that it is within the max allowable seller concessions, both of which in this scenario would fit. I hope that helps. If you have any questions about seller concessions, negotiations, you want to get a mortgage comparison, curious about anything regarding mortgages, refinancing, purchases, etc., please feel free to comment below. Give us a call. I can be reached directly at 281-304-6353. I hope everybody has a great day.